Good day. Today we'll be looking at financial institutions. The following objectives are going to be covered. Students will be able to define financial institutions, list the difference of financial institutions, either from banking or non-banking, be able to distinguish between banking and non-banking financial institutions, be able to explain function of each financial institution, be able to describe the importance of these institutions to the larger economy or to all the economic agents involved. Let's define financial institution. What is the meaning of financial institution? Financial institutions are organizations that provide financial services to individuals, to businesses, and government. These services include accepting deposits, granting loans, investing money, offering insurance, and facilitating payment systems in any economic setting. This implies that these financial institutions serve as intermediaries between the savers and borrowers. And they actually play a vital role in the functioning of the financial system as well as the economic growth. So they bridge the gap between the surplus and the deficit section of the economy. The people that have money to save, or the people that have surplus, and the people that need money to do business. So financial institutions stood in between to moderate this and make sure that the running of the financial system contributes to economic growth. So from this, we can also look at financial institution from the angle of all business organizations which hold money for individuals and institutions and may borrow money from them in order to give loans or make other investments. Let's look at the types of financial institutions that we have. First, we have the banking institutions. The banking institutions are constituted by are licensed to accept deposits, and they are constituted by the central bank, the commercial banks, the microfinance bank, merchant banks, as well as development banks. You can also think of the savings bank. When we talk of those that are licensed to accept deposits and provide services like loans and transfers. So for every economy, we have an apex bank, which is known as the central bank. But in the case of Nigeria, we have the Central Bank of Nigeria. Okay, you can have the Central Bank of Ghana, you have the Central Bank of Ethiopia. So these banks are the apex bank. So we also have commercial banks. The commercial banks break the box from the central bank. You can think of a bank like First Bank, GTB, United Bank for Africa, EcoBank, Zenith as examples under the commercial banks. So then we also have microfinance banks. So these banks are like community bank or society banks, and today you can see that some of these banks have even graduated into phone applications when you think of the OPay or the PalmPay. So they are microfinance bank, or they are rooted in microfinance banking. We also have merchant banks and as well as development banks. So when we talk of development banks, you can think of Bank of Industry or Bank of Agriculture and so on. So as much as we have one aspect of the financial institution known as the banking sector or the banking institution. We also have non-banking institutions that regulate the financial system. Okay, so in this case we can think of the pension funds or the insurance companies or even the mortgage banks as well as the finance houses, stock brokerage firms and cooperative societies. So they in one way or the other specialize in financial services that make sure that in the economy they were able to manage the surplus and the deficit to all the economic agents involved, like the individuals or businesses or even government. Okay, uh, having said this, so we can see from the screen that we can easily distinguish between the banking and non-banking institutions with this. So when you look at it, you see that for banking institutions, they can accept deposit from any of the economic agents earlier mentioned. So meanwhile, non-banking institutions are not licensed to accept deposits, even though a non-banking institution like a cooperative society do accept deposits, but it is not going to be daily deposit. It's just going to be like savings. So they also do savings and loans, but they are not licensed to accept deposit from the public. Okay, so while banking institution can issue checks, non-banking institution cannot. uh, a banking institution, most banking institutions are regulated by the central bank of every nation. So in the case of Nigeria, we have the Central Bank of Nigeria that is regulating them. The main function of banking institutions revolve around granting loans and accepting deposits as well as making payments. Okay, while the main function of non-banking institution it has to do with investment, pensions, insurance services, mortgage services, and so on. So, further, let's look at functions and importance of all these financial institutions that we have earlier mentioned. So, let's start with the central bank. So, central bank controls money supply in an economy. They issue currencies, they regulate banks and act as lender of last resort to commercial banks. So when we say central bank control money supply, so they do so by selling treasury bill when they see that to the public, when they see that the money supply in the economy is too much, or buying treasury bill from the public when they see that there is shortage of money supply in an economy. So they also print currency, they print notes and coins. So it is also the function of the central bank. They regulate the commercial banks, so in many ways, in terms of the percentage of reserve that they have to keep, in terms of how they operate, and they also act as lender of last resort. So the commercial bank will always run to them when they need money, when they need money supply. So we can also talk about the commercial banks, which basically accept deposits from public or from every economic agent. They grant loans. They also provide payment services and safeguard funds. Beyond this, central banks are also known to be a custody of valuable items like gold, like certificate. So you can as well save it with commercial banks. Okay, now what are the functions of microfinance banks. Okay, microfinance banks are banks that provide small loans and savings services to low-income individuals and rural communities, and especially to small medium enterprises within the society. So they are also a big player along the line of financial system and economic growth. Okay. Now development banks offer long-term funding, maybe for industrial development, maybe for agricultural development, and it could be for infrastructural development. So in essence, we can say that the banking institutions under financial institutions are very important in the following ways. First and foremost, they encourage savings and investment in an economy. They support economic development, through the regulation and through bridging the gap between the surplus and deficit money supply. Okay, so they provide loans to businesses so that businesses can grow. So they help people keep their money when they have surplus. So again, they provide credit to businesses and individuals. So and these are crucial activities to economic growth. Um, Now let's go and check the functions and importance of non-banking financial institutions. For instance, we have the insurance companies which provide financial protection against risk. They mobilize savings as well, and they can also invest in long-term projects. Okay, insurance company can sell life insurance, they can sell family insurance, motor accident insurance. And if you are very conversant with car users, so you see that there are a lot of insurance that cover. It could be third party, could be comprehensive. So insurance provide protection against risk, against any risk at all. Meanwhile, pension funds, for instance, are very crucial to the management of retirement savings, and they ensure post-retirement security, so which is good for any economy. So we can also look at the mortgage banks, which provide long-term loans for housing and real estate development. So you can take a mortgage of 20 years as a civil servant, for instance, while you pay small money every year or every month. At the end of the day, you become the owner of a house. So, and this is made possible by the service provided by mortgage banks. So then we can also think of investment firms which help individual and institutions invest in securities. So what are the importance of the functions to the economy? Number one, these are the activity promotes long-term economic stability. Because most of what they do are long-term. So this make economy stabilize over a number of years. So they also mobilize capital for national development. You understand? For instance, when you look at investment firms, so government do borrow from them to finance maybe an infrastructural development. Okay, they reduce financial risk because of the long-term projection. So financial risk is being reduced with the activities of these financial institutions. Okay, at this point, I want us to reflect on what we have done so far. So let's do some activity here. You identify a financial institution. Two, Classify what you identify as banking or non-banking. And 3, explain its function and importance. So actually I'll be expecting your response in the comment below as soon as possible. Okay, and we can as well go with some quick quiz before we end this class. Okay, so in this quick quiz, so we look at the definition of financial institution. So this is just like summarizing all that we have done so far. So who can define financial institutions? Okay, good. So number 2, let's list 2 types of financial institutions. So I will be expecting your answer in the comment below. Okay, mention a function of each type. So when you list the 2 types of financial institution, mention a function of each type of this financial institution. So then provide one difference between the two. So we need one difference between the two. And finally, 2 reasons they are important to the economy. 2 reasons they are important to the economy. So with this, we have come to the end of today's class, and the take home from here is that financial institutions are vital to economic growth. They mobilize funds, they manage risk, and support investment. And apart from this, we'll be looking forward to meet in the next class, as we are going to explore, we are going to go further in the topic of financial institution, which is going to be money and capital market. So thanks for being part of this intriguing class, and you are welcome.